Good morning and welcome to the China Show, taking you to some live pictures right now from the HKMA Global Financial Leaders Investment Summit. You're seeing Chinese Vice Premier He Lifeng speaking right now. We're going to have more from that just ahead. But in terms of our other top stories, well, Asian stocks extending a Wall Street rally after Treasuries halt their sell-off. Traders watching news around the Trump cabinet and awaiting earnings from Nvidia later in the week. Bloomberg learns the US will push Google to sell off its Chrome browser in an historic crackdown over its search monopoly. And we're live at the Hong Kong court that's set to sentence dozens of former democracy activists convicted in the city's biggest national security trial. It's a very, very busy day across Hong Kong this morning. As I said, we've got the HKMA summit that's just kicked off. The Chinese Vice Premier He Lifeng speaking right now, but more very big guests across the financial spectrum just ahead. In terms of what else we're seeing, well, it's really that focus on how equities are trading from here, given you've got Hong Kong stocks sitting around their 50-day moving average, so it's a bit of a resistance point, but also earnings the big watch. We've had most of the MSCI China reporting so far and more than 50% to the downside. Eco-wise, fairly light, but we are in the window for the one-year MLF, and also, of course, really watching what's happening in the courts because it's a very big week for Hong Kong activists. We've got a number of those who are being sentenced. We've also got Jimmy Lai entering the courtroom for the first time on Wednesday, but that's what we're going to have here for the agenda. Let's also go and watch what's happening at the HKMA summit in particular, because as I said, a very big suite of guests. We're not only hearing from the Chinese Vice Premier, we're also going to be hearing from regulators. That's a big focus as well. The Minister of China's National Financial Regulatory Administration. We're hearing from the Securities Commission. We're hearing from the PBOC. So all of that really focusing very much on what we've had from policymakers in China so far to try and turn around that market sentiment. Banks-wise, of course, because we've got a lot of well-known faces in the crowd. Jane Fraser, for instance, from Citigroup, David Solomon. Ted Pick, for instance, the new CEO over at Morgan Stanley. We're going to be hearing from those, plus more attendees, for instance, Jenny Johnson, Franklin Templeton. That's really that crypto approach as well. Mark Rowan, someone who's been touted perhaps to take a role in the Trump administration. Very, very big names in the city today. But we're going to leave that there and we'll go back to David Ingles, of course. He's on the ground for us at the HKMA summit, but also just what we're hearing from her this morning, the expansion measures. He's saying that they've so far proved effective. Of course, we have sort of seen a bit of a mixed market reaction really so far to the stimulus measures. We've definitely had officials saying that they can do more, leaving perhaps a little bit of room, a little bit of dry powder, cards up their sleeve to deal with the incoming Trump administration. But that's the opening address you've just had there, the Chinese Vice Premier speaking at the Global Financial Leaders Investment Summit. It's joined or put together by the HKMA, also with the SFC in the city and the Hong Kong Academy of Finance. But as I said, a very big day across Hong Kong. Also looking at what the courts are doing, and today we're going to get the sentencing for dozens of former democracy activists in the city's largest national security trial. Our China correspondent Min Min Lo is joining us from outside the West Kowloon Magistrates Court. And Min Min, just start us off with essentially what we can expect today and what you're seeing on the ground.
Yeah, it's a very cold, rainy, windy morning here, but that didn't stop many people from queuing up outside the courthouse this morning. When I arrived, they were really wrapping around this building with their umbrellas out. Some of them told us they were here overnight, and as you can see behind me, heavy police presence here. There's some police vans situated along the roadside as well, with wedge barriers set up and cordons as well. We're about 1 hour from the start of the sentencing, and this is really an unprecedented scale of sentencing of these 45 pro-democracy activists under the national security law. They are charged with conspiracy to commit subversion for participating in this unofficial non-binding poll in they were arrested in January 2021 for participating in that unofficial primary election. And the goal of the defendants at the time was to try to secure a majority in the legislative election in order to have the powers to block the city leaders' agenda. But of course, 47 of them were arrested, and out of those, 16 had pleaded guilty. And of those 16, 14 were found guilty and 2 were acquitted. And the remaining 31 had pleaded guilty in the hopes of getting a reduced sentence. So there are a couple of big names that you might recognize. One of the most high-profile one is Benny Tai, who is accused of being the mastermind behind that unofficial primary election. And if he is charged as being the principal offender, he could face between 10 years and life in prison. And others who are charged, if they are charged as being an active participant, they could face between 3 years and 10 years in prison. And the rest, if they are charged with being a common participant as opposed to an active one, they could face less than 3 years in prison.
Min, this concern about human rights in Hong Kong, it's something that's being voiced in places as far away as Brazil. We've got the G20 summit underway right now, and we know that President Xi has just met with the new British leader as well, Keir Starmer. He definitely had something to say around this issue, but take a listen.
I'm very pleased that my Foreign Secretary and Foreign Minister Wang met recently and discussed respective concerns, including human rights and parliamentary sanctions, Taiwan, South China Sea, and our shared interest in Hong Kong. We are concerned by reports of Jimmy Lai's deterioration health in prison.
How was that message received, do you think, by President Xi and also others in Beijing?
Well, you know, China has always called on other countries not to meddle in its internal affairs, and they consider this an internal affairs as well, even though some countries have criticized the imposition of that national security law, saying that it did not preserve some of the political freedoms that were supposed to be guaranteed under the one country, two systems model when Britain handed over the city back to mainland China in 1997. And you have, criticisms from other Western democracies like the US calling these trials being politically motivated and calling the defendants to be released because of some of the conditions around this trial that is departing away from common law tradition. For example, many of these defendants have already been in jail for about 3 years. They were denied bail. They were denied a jury trial as well. And instead, they are being trialed by 3 handpicked judges, handpicked by the chief executive, John Lee. And that is why this case is coming under so much international scrutiny.
That was our China correspondent, Min Lo, and we'll be back with you throughout the hours today for all of that action down at the courts. But let's also take a look at what's happening across markets, because it's certainly pretty conflicting signals. We've really had a very good start to the week, or at least we had a very good morning session to start the week. Actually, into the close yesterday, we saw the CSI 300 giving up a bit of ground. The Hang Seng closed high, but only 8 or 0.7%. Still, though, in terms of what we had from the government or the policymaker side, well, on Friday we had the push telling governments to boost shareholder value. That's been something that's been a positive, and also perhaps a bit of a reassessment of sorts around stimulus and the slate of earnings. As I said, most of those have been negative so far. Golden Dragon Index overnight, we saw that boost coming through on Wall Street, up 1.8%. Again, another good lead-in for the session today. But broadly, if you take a look at Asia ex-China today, we are moving higher across the board. And if you were to focus on one thing in particular, take a look at what's happening with the US 10-year yield, because we have had that march toward the 4.5% mark. It gave up somewhat. That led to a pullback in dollar demand. And that is, of course, 2 twin factors that benefit Asian equities. US futures just fairly steady there. But let's bring in Virginie Maisonneuve now, Global Equity CIO at Allianz Global Investors. And Virginie, firstly, thanks for your patience. But secondly, I want to kick off with how the market's really thinking about President Trump coming back in, because it's sort of been, we had that sort of Trump rally. It seems to have given up somewhat. There's a lot of question marks, not only around what his administration is going to look like, particularly overnight, who's going to be the pick for Treasury, who's going to be leading the NEC, but also you've got those question marks around inflation. So what are you thinking?
So I think the key items to watch is, of course, you need more clarity on tariffs, and we won't have that until next year. As far as tariffs are concerned, is it a 25.5? Is it a 10.60? And where will the 60% apply? So if you are a European company that has components in products exported to the US, components from China, will you have to describe in detail all your global supply chain and apply a 60%, a blended tariffs? We do not know that. I think that complexity is going to be very important. So what does that mean? Understanding the global supply chain redesign, which has been in process for years, is very important. Inflation. We know tariffs will be inflationary. When will the inflation pick up, particularly in the US? But there'll be a wind. And you can see that the disinflation push that we've had from the post-COVID, the tightening of monetary policy, etc., is running out of steam. You can see that with the latest numbers, and it's not drastic. We had, part of inflation that was flat, part that was up, and we had the PPI last week, and where will PCE be? Probably a little bit up, but everything else being equal, that factor is off, I would say. So how will those tariffs reignite potentially some inflation, and how does that differ for the US versus Europe and Asia? Because clearly the tariffs won't be in place. So then you go to the next question, which is, what is the reaction function? Reaction function from China will probably be a boost, a fiscal boost. Reaction function from Europe, redesign, although direct export from Europe to the US for products manufactured in Europe is actually very low at 6%. And most of it is in strategically important area like aerospace and energy and pharma. So you have to see the dust settle. The next big thing is growth. We know that the tariffs, the Trump policies will help growth in the US, will have a negative impact on Europe and a larger negative impact on China, for example. So with all of those, I think after the initial boost from focus on the regulation and the Trump policies, as you absolutely said, people are looking at who's going to be leading this government, who's going to be in the cabinet, and when can we get more detail on the specific measures in order to adjust. So you have a repositioning in the market going on with people rebalancing some of their portfolios.
It's difficult to know in this sort of market if you really want to be active or if you want to be passive, because it seems like with that level of uncertainty, it's very difficult to proceed with any level of conviction as well. So how are you advising people to think about constructing portfolios in this environment?
I think it's definitely active. The reason is that even though you have some uncertainties, you also have long-term structural trends that you can play. You also have the choice to pick quality balance sheet and quality companies. We will have more flexibility to be absorbing some of those shocks. You also have companies, for example, if you take domestic US companies who will do well. You have companies, if you go back to the AI data centers, spending, et cetera, which are going to sell through despite all of this. You also have the redesign of that global supply chain, which I think, if you think of all the logistics around it, if China is involved in supporting a new port, say in Latin America, and the services that are brought to that port are Chinese, for example, how will that be treated as opposed to exporting direct goods? So there's a lot of shifts going on and definitely opportunity to position portfolios.
Which are the opportunities that you see in Asia in particular? Yes. Which are the markets or sectors that are going to be the standouts?
So we still like China innovation. Definitely. It's a long-term play. China, contrarian play, valuation very attractive, domestically dominated. At some point in the future, we will see a pension reform. Having households, having most of their wealth in property, as we know, is not the best thing for the next. So the policy is stabilize as much as you can property, and I think the next step will be invite people to create savings through fixed income and equity market. So innovation in that and the dividend-paying stocks, are still very attractive. If you look at China, or if you look at Asia overall, you have that redesign. So you've seen areas like Vietnam and Malaysia benefiting. And then you have another bucket, which is which countries have strong enough balance sheet that they can lower rates, even if for the time being the dollar is strong. And you could probably put in that category Indonesia and the Philippines. Then a final area that I find very attractive is, of course, India. And India is actually quite neutral between China and the US, right? If you look at this. In the service sector, a lot of companies in India have actually US bases, right? And so you have the demographic dividend, et cetera, et cetera. People have said it's expensive on a growth to a PE to growth basis. We still think you find very attractive stocks. You know, you need to choose 40 to 60 stocks out of thousands, and they are attractive opportunities. So I think I would stick with that. Very well constructed portfolios and some diversification, of course.
All right, Virginie, thanks very much for your time this morning.
You.
That was Virginie Maisonneuve, the Global CIO Equity at Allianz Global Investors. And we're going to go back to the HKMA Global Financial Leaders Investment Summit now. And David, you've had a very busy morning there on the ground, but also just so many high-profile speakers are at that event.
Yeah, in fact, in the room just behind me, Belle, and thank you for having me. Apologies to our viewers if I'm a couple of minutes late. So right behind me is the ballroom, of course, here at the Grand Hyatt here in Hong Kong. And taking place, in fact, and the reason I say this is while markets have the attention of Chinese regulators, while we are infatuated with speculation on what the next moves could be, the room right behind me has the NFRA, Li Yunzi, you have the CSRC chairman, Wu Qing, and also Zhu Hexin, of course, the deputy governor of the PBOC, in the room behind me talking about developments on the mainland. And coming up here in the show to talk us through many of these other themes coming up, you have Douglas Flint, chairman of Aberdeen. You have Juan Delgado-Moreira, of course, there on your screens, Hamilton Lane co-CEO. And of course, our host today, Eddie Yu, out of the HKMA, will be joining us in a couple of minutes. Keep it here with us. You're watching The China Show. Good morning.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
You're watching The China Show. Quick note on the Yuan fix that just came through. The reference rate stronger than had been estimated for the 10th straight day in a row. It's also the 5th session that we've seen the spread bigger than 300 pips. So we'll leave that there, but certainly keeping an eye on the Chinese yuan, of course, very prone to these rising tensions between Beijing and Washington. And on that point, actually, the US President-elect Donald Trump is said to be considering putting former Fed Governor Kevin Warsh in the Treasury Secretary role, with Scott Bessent as Director of the National Economic Council. For more on this, let's bring in our Bloomberg editor, Derek Wallbank, joining us. And Derek, I mean, there's certainly the pedigree from Wall Street that Donald Trump wants to see.
Yeah, that's exactly right. Now, look, this is a really interesting position, right? And if you remember back into Trump's first term, these positions, be it the Fed, be it the Treasury, he likes to look at bold Wall Street names, people who are very, very Wall Street familiar and who Wall Street is familiar with. So it's not really a big surprise that he's considering those. What is a bit of a surprise right now is how long this appointment has taken. I mean, we're hearing names for transportation and all sorts of other positions long before we're hearing Treasury. And I think Treasury had been one that we had been expecting to hear before. But part of this reflects a divide within Trump's advisors about who ought to get it. Remember, so Warsh is one of the names that's been mentioned. Bessent had been one of the names that had been heavily mentioned previously, as well as Howard Lutnick of Cantor Fitzgerald, who is co-leading Trump's transition effort, he may be a little sort of step back at this point. There are other names in there as well who have been mentioned here, but the fact that this hasn't been decided on has been a point of some note. Indeed, we're seeing some reporting, Semaphore had a piece that suggested that there had been opposition research floating around about Bessent's firm and its own returns was sort of like cherry-picked values that included some of the down years and not some of the up years. You are seeing kind of some of this, if I might call it political knife fighting behind the scenes to try and get one person in over the other. But the fact that Trump hasn't had a decision yet, that is a really notable thing for Treasury. It's a really big job, too. I think, you know, a lot of times people think, okay, well, it runs the Treasury Department. This person gets to sign currency. Isn't that fun? Sure, yes, but this is also a critical position when it comes to all of the basics of U.S. economic finance and government finance, but it also is a position that has a really big role to play in terms of sanctions, in terms of those sorts of things that Donald Trump has said he's going to be, you know, considering and weighing as it comes to his foreign policy, right? So if you're sitting there talking about some of these key economic levers of U.S. policy under a president-elect who in his last term was heavily reliant on those levers of policy, this is going to be an absolutely critical position to fill, and that name is going to be critical as and when it comes.
Derek Walbank, thank you so much, managing editor. They're joining us out of Singapore. You know, among the names that Derek just lined up there as well, I'd also like to say Mark Rowan, of course, who co-founded Apollo, was one of the names that was floated through. And I think I caught a glimpse of him actually right here. And, you know, I'm not going to name names, but, you know, a lot of the global banking CEOs are here. And not that I was eavesdropping, I was actually part of some of the conversations here. And the ongoing joke here is that the next U.S. Treasury Secretary might not actually be in the U.S. at the moment. Ironically, interesting enough, here in Hong Kong at the HKMA Leaders Summit. But again, we'll just have to wait and see what President-elect Trump decides as far as that is concerned. Yeah, ongoing right now, of course, are lines coming through this briefing. Up developments on mainland China's financial developments. What you have on the stage is you have the CSRC, among others, the PBOC as well, NFRA, talking about how there are more fiscal and banking buffers here in case that China does need to sort of tap that lever once again. Going into the open today, the Tuesday session, just under 7 minutes away. You're watching The China Show. Good morning.
Looking ahead to the open in Hong Kong, and we're actually expecting the Hang Seng to post another day of gains if futures are any sort of indication here. Analyst actions note as well in the session. We've actually had CCB pushing through with a wave of upgrades for the likes of Agbank, Bank of China and BOCOM. Also hearing from financial regulators in China saying that banks have sufficient buffers. Some of the stocks we're keeping an eye on. Earnings is certainly a big focus for us. We've got Xiaomi, for instance, that posted a beat. Xpeng also up later today. Definitely questions whether it continue that stellar run. Also tracking Weibo, of course. And finally, China Mobile takeover efforts, perhaps a focus as well for us.
Welcome back. You're watching The China Show. We're live here at the HKMA Global Financial Leaders Investment Summit taking place on stage. As you can see, are some of China's top financial regulators with our host today, the HKMA Chief Executive, Eddie Yu, who'll be joining us, by the way, in a couple of minutes here on set. Apart from that, we have global bankers in the city, effectively the heads of each of the large global banks there, UBS, Citi, HSBC, are set to also speak. We just finished a conversation, of course, in the last hour with Bill Winters of Standard Chartered, so stay tuned for that. Apart from that, we'll get you, of course, all the news coming through here as Bell. Markets are gaining, well, 2 straight days today in Hong Kong. We'll see what happens at the open, although the momentum has certainly shifted more to neutral, if not to the downside. And as we await for more catalysts here coming through out of financial regulators in China, Bill?
Yeah, that's right, Dave. I mean, right now it sort of seems to be that focus on what are we hearing from some of the big analysts or banks out there. And yesterday, for instance, there was that story around Morgan Stanley, Goldman Sachs turning more cautious on Chinese stocks up against the backdrop of what you continue to hear from regulators. So late Friday, for instance, we had regulators saying that companies need to improve shareholder returns, sort of similar to that corporate governance push we've seen from Japan, even Korea, for instance. Whether that sort of has a meaningful impact, of course, really depends on how the stimulus measures take effect, earnings that come through, even though at this point we're 90% done for the MSCI China and mostly we've had disappointments. The CSI 300, though, we are seeing some modest gains here to start the day, and we're also actually seeing a lot of the big movers like Weiqiao Motai, for instance, CATL to the upside. But let's change on, take a look at what's happening in Hong Kong as well. Yesterday, we actually saw Hong Kong outpacing what we had in the CSI 300. So mainland equities, that bigger gain you're seeing for Hang Seng Tech up 1.4%. Still, we've got those earnings that are coming through. Xiaomi, for instance, really impressed yesterday. We saw that beat for the latest period. Xpeng, of course, another one to note in the session today, given we've seen around a 90% or more than 90% run for the stock. Can that be extended? Weibo, of course, one of the other names that's going to be posting its results later today, along with China State Construction Bank, as we actually have seen some brokerages turning more positive on the outlook for lenders in mainland China. Gold miners to track as well. We've actually seen a surge in gold prices. Goldman Sachs, for instance, is saying it can touch $3,000 an ounce. And again, some positivity coming through, but it does seem a little bit selective at least. Let's bring in our China Markets Equity Senior Reporter Abhishek Vishnoi joining us this morning. And Abhishek, it was a strong start to the week, but there are a lot of headwinds, not least, of course, from the Trump administration, the incoming administration. What's standing out to you today?
That's right. You know, the investment thesis has changed a little bit. It has become a tinge more bearish, at least till the next key NPC meeting, which will take place in March. So Trump comes officially into power in Jan, and given the China hardliners that he is wooing in his cabinet, you know, it looks like he is going to go through with his promises on tariffs and export controls. And that has started weighing on analysts' mind. We have seen, you know, people who are bearish going uber bearish, like MS has turned further underweight. We have seen tactical rotation from some of these strategies, like, you know, CLS did in favor of India and ASEAN from China. So this is a playbook which is, you know, which has the echo of the playbook we saw during Trade War I, right? So in that context, the outlook is becoming something like, you know, range bound to probably drifting lower till the middle of February, and then the focus shifts back to what China is going to do to counter Trump, and NPC comes into focus, and then from March onwards again, you know, the risk would be on the upside. But for the short term, the setup has become a bit more bearish. You know, the growth outlook has come back into focus. Well, even if China mends it, the world's biggest economy, which was already growing at above trend growth, is expected to grow even, you know, better under Trump. So that context saps out some confidence from, you know, the growth part of China. The tariffs and export controls sort of cap the valuation, and like you yourself were mentioning, I mean, earnings so far have been dismal, although, you know, there have been upgrades on the 12-month side, but, you know, the reported earnings are sort of keeping a cap on the enthusiasm that China tech earnings have led to so far. So the setup looks a bit bearish, and, you know, the outflows from foreigners, especially on offshore side, has started picking up.
Yeah, Abhishek, David here. I'm here at the HKMA Financial Leaders Summit, and I can't believe I'm about to quote Eminem here, but I guess to underscore the point you just made, this sort of snap back to reality, I guess, is one way of putting that. So there's a discussion taking place behind me. We're just getting a line coming through, in fact, from that discussion out of the CSRC, Wu Qing, who's talking about they will continue to expand this mutual market access. Now, I know you talked about all these notes coming through out of the sell side, maybe sounding more bearish, and the sense I want to get, and tell me what you're seeing as far as this is concerned, is the floor in, though? Do we retrace all the way back to early September levels, or is it simply bearish from given how far we've come up?
Yeah, I don't think we'll retrace that far back. I mean, honestly, it looks like box trading, range-bound trading. I'll be very happy if China remains sideways till Trump comes to power and throws his first salvos, and then China decides what it wants to do. But for the near term, so the outlook from now till Jan end or mid-Feb, so for the 3 month, the setup is not very favorable for China. And like I was saying, the focus is once again shifting to the rotation to, let's say, go to China +1 strategy, look at ASEAN, I'll look at India for some point. India has gone through some bit of correction, so that point about valuations, those concerns are getting ebbed a bit. But for the long-term outlook, I mean, valuations are sacrosanct, David. You know that MSCI China is trading at 10x. The government is trying to do everything to, improve the health of equity market. And, never before in China's history, I think, equity market has become this important of a KPI for the political leaders, for administration. So for the long term, you can't really write off a $15-16 billion economy, $1 trillion economy just like that. Given where valuations are for the long run, I mean, if you cherry pick stocks like people like hedge funds and other billionaires are doing, I think the setup would be nice. But again, for the short term, it's not looking that great. So maybe sideways trading would be best bet till mid-Feb.
Abhishek, thank you so much. Great stuff outlining where we are as far as this stalled question mark rally in this great Chinese market. Abhishek Vishnoi there out of Singapore for us. Right, just very, very quickly, just to recap what's taking place so far behind me. So we did just hear from the CSRC chairman, I believe right now speaking on stage on your screens on live go also by the way for our Bloomberg terminal clients is the deputy governor of the PBOC, Chu Hexin, also talking through there. We'll give us a few minutes, but according to the schedule, which I'm looking at right here, so in about, if things are on schedule within the next 10 minutes or so, will be the next discussion. The Citi CEO, Jane Fraser, will be joining that. UBS Chair, Colin Keller. Jean Lemire, of course, out of BNP. And Mike Kanetsugo, of course, chairman of MUFG, just to give you a sense of the heavy hitters, of course. Just a couple of meters here behind me at the HKMA Financial Leaders Summit taking place here in Hong Kong. We'll be back after a couple of minutes. Don't go away. This is The China Show.
Bloomberg's learned that HSBC is asking hundreds of managers to reapply for jobs in the new corporate and institutional banking division. That's as the bank continues to streamline operation. Let's get more from Bloomberg Intelligence senior analyst Matt Ingram. And Matt, we were just discussing there in the ad break, and you were pointing out that this isn't the first time that HSBC has tried this, but there is specific pressure that's going to come onto the bank, particularly into 2025.
Yeah, hey Annabelle, hey David. Yeah, look, this has been a saga since about 2010 when Stuart Gulliver took over. They need to cut costs. HSBC is built around 60 geographies globally. Each of those is a fiefdom of its own. I mean, some might call them a family, and that makes this a heart wrench for HSBC's businesses. But yeah, there are headwinds coming next year, and they do need to cut costs. Its cost-income ratio is too high. Clearly, they need to look at which relationship managers and which business heads need to stay. The tricky thing is looking at geographies. Do they need to be in all these markets? And if they do, how much leadership do they need?
What sort of, how much are they looking to tighten the belt here? What sort of cost savings do they actually need to introduce?
Well, I suppose another way to look at that, Annabelle, is just the headwind from interest rates. If the Fed does cut by 100 basis points next year, which admittedly is looking less likely, the headwind's about $2.7 billion. So that's a big chunk of the salary bill. They need to find that somewhere else. If they want to keep these big buybacks going, if they want to keep their return on equity where it is, that's the headwind they've got from interest rates. That's what they've got to find somewhere else.
Matt, David here, and well, first off, well, just some inside baseball to our viewers. Of course, you and I were messaging earlier on while we were speaking with Bill Winters of Standard Chartered. And, apologies there for mixing that up. But I guess the reason I bring that up is so Standard Chartered had a very good third quarter. The wealth business is doing well. I guess it will depend, to your point, on where interest rates go next year. And I asked him whether or not, if rates go too low, is that going to be a problem? Bill Winters said no, it was a sweet spot. Currently, the expectation. But I wonder whether these two banks might generally be in the same boat. I mean, do we need to... Are banks effectively planning for a slowdown next year? I mean, talk to us about what buybacks signal from Standard Chartered, and whether or not they need to slim to the point you're making on HSBC, also their sort of management team there.
Yeah, gee, there's a lot of moving parts, David. I think banks are running faster to stand still at present. There's clearly still compliance costs that are rising. There's inflation that's causing pressure. You've got the interest rate headwinds. These are different banks. They do different kinds of banking. There's a lot of tailwinds in investment banking and trading at the moment. They might continue into next year, and they might offset these rate headwinds. But Stan Chart's a good example of a bank that grew its costs in line with revenue for a decade, and then when revenue fell in the last rate cycle, they were left hanging with a big fall in profit. So I think it's right to look at costs at this stage of the cycle. We don't know what credit's going to look like next year, but I think the buybacks speak more about capital and slowing growth. They've got excess capital. Shareholders want them to give that back, and they're listening to shareholders.
That was our Bloomberg Intelligence senior analyst, Matt Ingram there, and some other corporate stories that we're tracking this morning. Goldman Sachs is talking with potential partners as it plans to spin out its digital assets platform into a new company. Goldman's global head of digital assets, that's Matt McDermott, told us plans are in the early stages, but the target is the next 12 to 18 months. Electronic trading platform Tradeweb also says it will work with Goldman on new commercial use cases for the platform. Nvidia is teaming up with Alphabet's Google to pursue quantum computing technology. The company's announced Google will use Nvidia's EOS supercomputer to speed up the design of quantum components. The idea is to simulate the physics needed for quantum processors to work, helping overcome the current limitations. This could make machines much faster than today's chip-based technology. China's biggest express delivery company, SF Holding, is planning to raise nearly $800 million in its Hong Kong listing. A filing shows it's offering 170 million shares at up to $4.66 a piece. Trading is expected to begin next Wednesday, that's November 27. And meanwhile, sources have told Bloomberg that Xiaomi, or a unit of Xiaomi, is among the cornerstone investors in the share sale.
Right. To our viewers just joining us right now, a reminder that we are here at the HKMA Financial Leaders Summit, and taking place behind me is a discussion with financial regulators, mainland financial regulators, and on your screens. And we're listening to, we just heard from Wu Ching out of the CSRC. This is the Deputy Governor now of the PBOC, outlining, of course, their updates from their end. Let's listen in.
We have also introduced enhancements to risk management. We're also further opening up different aspects, aligning the rules between banks and bonds so that outside investors have easier access to the Chinese capital market. As Mr. Wu Qing just said, we want outside investors to share in the opportunities and success of China's economic development. Now, my other point is that we're also relaxing rules, certain rules for outside businesses. Hong Kong is where much resource allocation happens. The outside investors can invest in different investment products, derivatives in Hong Kong through the qualified scheme. SAFE has approved roughly 200 QD institutions. And in terms of amount, that's more than $160 billion. And that helps mainland investors allocate the resources. There are also measures to facilitate access to financing for businesses. In February, the mainland signed an MOD with Hong Kong It's about credit access and credit referencing. We support businesses in Hong Kong in terms of access to credit. SAFE and the PBOC will further support mutual access between Hong Kong and the mainland. We will continue to really support the development of the GBA. We will strengthen Hong Kong's role as an offshore RMB business hub. So we have to make the most of our policies, and on that basis, we factor in changes in the global financial scene. And we stick to the principle of being open to the international world. We keep promoting opening up. Finance is supposed to serve the real economy. We will keep promoting measures to ease access to financial services. We have so many investors here, financial leaders. You're welcome to visit the mainland. Talk to us. We stand ready to provide easier access so that you can achieve great returns in the mainland. That we are most grateful for the remarks from Mr. Zhu. Well, time is almost out, so let's give a round of applause to our three speakers. Thank you.
Welcome back, and a look at some of the top global headlines this morning. Ukraine's allies are pushing Volodymyr Zelensky to consider new ways to get Russian President Vladimir Putin to the negotiating table. Two European officials say there's a growing recognition the Ukrainian leader needs to compromise as neither side can secure a victory. We're told German Chancellor Olaf Scholz also urged Putin to engage in peace talks in a recent phone call. Lebanon and Hezbollah have reportedly agreed to a US proposal for a ceasefire with Israel, with some comments on the content. An aide to the Speaker of the Lebanese Parliament told Reuters that a written response was delivered on Monday to the US ambassador. The proposed terms required Hezbollah to have no armed presence in the area between the Lebanese-Israeli border and the Litani River. According to the report, there's been no immediate response from Israel. A Singapore court has sentenced oil tycoon Lim Uwan Kuan, also known as OK Lim, to 17.5 years in jail for cheating HSBC and instigating forgery. The judge says a deterrent sentence is justified and no concessions are to be made for Lim's medical condition. The 82-year-old founder of Hin Long Trading is appealing. Lim and his children earlier agreed to pay $3.6 billion in a separate civil case. Now for another check of markets and big focus on earnings as we've been discussing this hour. Most of the Chinese ones are through for the MSCI China, but big names, of course, overnight. Trip.com, for instance, standing out with a sales beat. Xiaomi as well, actually. That's an interesting figure we're seeing there, down 4%, given we actually did earlier see shares gaining, and also we saw lifts to the EV target or production target in particular. Country Garden Services is another one. This is the management arm of the developer Country Garden, and we did see that pushing through or publishing a buyback of shares of up to 10%. So there's some of the stocks we're eyeing this morning. We'll dig more into those details around Xiaomi earlier and why we're seeing that drop given the better than expected figures. Broadly, what we're seeing for Chinese benchmarks so far in the session, we are about 30 minutes or 20 minutes into trade so far. We're seeing the CSI 300, the Hang Seng kind of flat, the Hang Seng Tech Index off the highs of the day so far. But certainly, Dave, it's not the highs of the day that we've seen so far at the HKMA Investment Summit, given there is such a slate of high-profile speakers ahead, and really traders are looking to see, can we get any sort of clues around the stimulus measures? And we've just also been hearing from the PBOC about how you can come into China and the access that they do want to provide to foreign investors.
Yeah, literally, the PBOC Deputy Governor, I believe, was the one who said, talk to us, visit China, talk to us, engage with us. We want to be able to enhance your returns, help us understand what you guys in terms of access on your, and speaking of high-profile speakers, right? So I've been glancing right over my left shoulder. So on your screens in the room behind me, that's Jane Fraser, of course, the city CEO. Anecdotally, someone who just stepped out right behind me, I'm not sure if he's in the shot actually, David Solomon's actually on his mobile phone, just stepped out, of course, out of Goldman Sachs. Joining us, Jane Fraser, of course, on the stage. You have Colin Keller out of UBS, you have Jean Lemire out of BNP Paribas, among others, of course, that are set to speak. This is the second discussion, in case our viewers are just joining us right now, of the day. We did start things off with Eddie Yu with a welcoming speech. The Chinese Vice Premier He Lifeng was here to underscore the message that Hong Kong is, in fact, and will remain the global gateway to the Chinese market. And, of course, that discussion that you were alluding to, Belle, with effectively the who's who of China's financial regulatory regime. So, yeah, lots of conversations coming up here still.
Yeah, that's right. And as you said, we're really hearing from many well-known faces. Jane Fraser discussing right now. She's actually been asked a question about the impact of the US elections, and I'm sure that's going to be a big focus throughout the conference today, given the amount of uncertainty around what Trump will mean for China in particular. But we do have many speakers ahead. Just in the next hour or so, we're going to be hearing from the chief executive of the HKMA. That's Eddie Yu, of course, getting his outlook for the city amid of what's been a slowing Chinese economy. And as I said, the return of Donald Trump to the White House. What exactly does that mean? It's important to note, of course, and as this has been pointed out on the T-Live blog, where you can also go to get more information on this, but there is a big focus for what it means, as I said, for China, big banks in particular.
So let's not stray into that. You talk about tariff. That's the first T that you mentioned. I happen to know that 25 years ago you wrote a book projecting that in 30 years' time there will be no more geographical barriers to.
If anyone has trouble with jet lag and sleeping at night, I recommend.
Good morning from the Asia Pacific to all our viewers joining us across the world. You're watching the China Show. We're live here at the HKMA's Global Financial Leaders Investment Summit. On your screens, of course, this is, I believe, the second major discussion taking place at Jane Fraser, and of course, the other global banking CEOs joining us there. And this is just really the start of what will be a lot of fruitful discussions around where we are with the global economy, opportunities, where this recovery is as far as the Chinese mainland goes. Joining us here on set, actually quite fittingly, to help us understand the context of why we're here and the importance. We have this every year, but why is this more important than, of course, in previous segments, how the business conditions have changed. Joining us, of course, is our host himself, Eddie Yu, of course, Chief Executive of the Hong Kong Monetary Authority. How are you?
Very good. Just a little busy.
I was, I was worried with the weather.
Yes.
Were you worried with the weather?
Yes. Because we saw the typhoon coming, right. But we're lucky in that it's actually changing direction to the other way. But that actually reflects the importance of climate change. We rarely have any typhoon in November, right. But this year, three or four already, and it's late November, still coming.
Right.
So we really need to tackle climate change together globally.
Well, I mean, I think that's part of one of the discussions. I think Bill Winters, who joined us earlier on, is a big climate change advocate as well. You mentioned you're kind of tired. Hosting duties, I would imagine. How was the welcome dinner last night? Everyone was there.
Great. It was great. One is that we moved our welcome dinner to a completely new building, landmark building in the Central District, designed by Sarah Hardett, and the building was just amazing. And there's a balcony, and people really enjoy it. You get onto the balcony, look at the city landscape of Hong Kong with the beautiful architecture around, and they just have a drink and talk about not just business but really friendship. And I thought the atmosphere went very well. And we also showcased some of our Hong Kong's art and culture. What I told them is that Hong Kong is more than just money and finance. We do have art and culture. So we got some of our drummers, our Chinese music orchestra, and we showcase a video of the famous Hong Kong movie. So everybody was enjoying it.
Yeah, I think in that building, of course, you refer to is the Henderson, right? That,
yeah.
You know, I think there's a big auction house there as well. The reason I know that is they've actually blocked our view from the Chung Kong Center. So we now have, it's a beautiful, if you had to choose a block, that would be it. What's the key message this year? So this is, I believe, the third edition.
Yeah.
The first one, I remember that was coming out of COVID.
Right.
The second was a recovery. So right now, what's the message?
Well, as you said, the first year was about Hong Kong is back. It was during COVID. Hong Kong was still in the middle of some of the restrictive measures. So we want to bring people in and show them that Hong Kong is back. We're open. And then last year, it was the recovery, but it was also Hong Kong MA's 30th anniversary. So we used that occasion to celebrate our anniversary. And come this year, the theme of the summit is sailing through changes. We're seeing a lot of changes and uncertainties around the world, ranging from the macro financial environment, whether you're talking about interest rates, whether you're talking about the Chinese economy, and also changes in geopolitics, the elections outcome, the military conflicts, and structural changes like digitalization or climate change that I talk about. So I think there will be a lot of very interesting and productive conversations in the venue about all these changes. So we do hope that the summit will continue to be a place where people share their views, share their experience, especially when we're in this fast-changing world.
Yeah, and I think more than any other of the past two meetings, the global markets are really attuned to Chinese markets right now because of the major policy pivot two months ago. And you know, the Vice Premier was here, He Lifang.
Right.
You just finished this discussion with the PBOC Deputy Governor. You had the CSRC there, the MNFRA.
Right.
What was that like? What's the tone as they were talking to really a global investment?
Right. Well, I think there are two parts. One is that they of course talk about the range of measures that you mentioned when they started in late September, which is a clear pivot of their policy direction, and they come up with a package of monetary, fiscal, and property measures, and the financial regulators then talk about the details, what they're going to do next, and some of the initial results that they are seeing, including, for example, when you look at the National Day holiday spending, it's actually been increasing compared to last year. And also, when you look at the PMIs, whether it's manufacturing or service, it's actually gone back to expansionary area. And for the housing sales, they're actually looking at it quite closely. In the last few weeks, the housing sales across the board has been increasing gradually, as against a decreasing trend earlier on. So it seems that there are some early signs that the policy measures are working. But as with any other policy measures, it will take time for those measures to cascade into the economy and for that to show up in the macro numbers. So I think we are going into the right direction, and I hope that they will continue to implement what's left in terms of their policies. And the other message that comes out very clearly is that, one, China continues to be open and they will continue with their financial reforms. And for the openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors, international investors inside the room. When they think about investing in Chinese capital markets, they can easily do it through Hong Kong. And they're encouraged to do it through Hong Kong, create their presence here, and strengthen and support the status of Hong Kong as an international financial center. And the central government, the financial regulators, will continue to explore with us the right measures to support Hong Kong's status as an international financial center. So these two messages, I think, come out very clearly.
It's fitting, too, that it's been 10 years since the Stock Connect, which is also taking place this week. And I think we heard from the CSRC chair talking about how they're looking to deepen the mutual market access program. What specifically can we expect from Hong Kong along those lines going into next year?
Right. I think there's a lot of scope to further expand the different Connect schemes. When you think about Stock Connect, Bond Connect, Wealth Connect, we've almost got it all. But some of the Connect schemes were only introduced in the last 3 or 4 years. Let's say the Bond Connect. Northbound Bond Connect is already very smooth and very open. Global investors can access China's capital markets very easily. But southbound Bond Connect, meaning Chinese institutional investors coming out to the world to buy global bonds through the Hong Kong platform, is still very limited. Currently, it's limited to only banks. But what about brokers, asset management companies, and importantly, insurance companies, which has a very big need for diversification of their assets? So can we expand the Bond Connect southbound flow into these other domestic financial institutions? And if that can be done, then Hong Kong will be greatly benefited, because Hong Kong will be the platform where they will launch their asset purchase, and Hong Kong's bond market will come up very strongly. The other area that will have a lot of potential to further grow is the Wealth Connect. Wealth Connect has only been introduced for about a year and a half, and there's a lot of scope in terms of both the quota, the product suite, the way that sales and marketing can be done, and importantly, the geographical area. So I think there's quite a number of areas that we can further explore with them to expand all these schemes. They're already there, but there's a lot of scope to deepen and expand.
Could you give us a clue of what might be next? Is there something that you think we should be looking forward to?
Well, I think what we're pushing really forward and also exploring with PBOC are things like the Bond Connect southbound, the expansion of it. And the other thing that I've not mentioned just now, because if you think about all the Connect schemes, you need the ecosystem as well. So when global investors buy their bonds, they need to use their bonds for some purpose, like collateral, like repo. So can we expand the use of the Chinese bonds by global investors for collateral in Hong Kong? Or can they participate in the repo market onshore? So these are the things that we will be pursuing, and I hope that there will be good news coming out very soon.
Well, yeah, well, tell us when you find out. I think we have 2 more minutes. Just very quickly, I need to ask you about Hong Kong.
Right.
Speaking of a pickup in the Chinese mainland housing market, we've seen signs of that as well. How about in Hong Kong? Are you making the assumption that the housing market, have prices bottomed, do you think?
Well, we don't comment on the property prices, of course. But
well, what do you see as far as the data?
But as you know, we have completely relaxed all our macro-prudential measures when the policy address was announced in October. And since then, we are seeing prices are stabilizing. It's actually rising very, very slightly. But importantly, the turnover has gone up quite substantially. In the month of October, turnover in the primary and secondary market came up to more than 4,500 cases, which is like 40% increase over the average of July to September. So we are seeing turnover coming up first, and hopefully we will see the property market in Hong Kong stabilizing, the residential.
Right. We have 2 potential headwinds in Hong Kong, right? So we have a Federal Reserve whose interest rate we import might not be able to cut rates as much compared to previously thought, and potentially we might have tariffs too. And we're a global financial center, of course, we might feel an impact.
Right.
Do you think policymakers in Hong Kong, including yourself, are prepared to shelter the economy in the event those 2 things come to fruition?
Yeah, well, the important thing is that we will have to build our own resilience. And no matter what shocks come your way, if you are resilient enough, then you're okay. In terms of resilience, for example, in the financial sector, just look at the buffers that we've got in finance. We've got $420 billion of foreign reserve, and our bank's capital adequacy ratio is 21% as against 8% international standard. And the liquidity ratio is about 170% as against a standard of 100%. So we have a lot of buffers in our financial system. But talking about the tariff, if the 2 largest trading nations in the world are having trade conflict with each other, it's not just Hong Kong. The global markets, global trade will suffer. But again, in the case of Hong Kong, we will just have to build our our resilience. And Hong Kong's economy is always very flexible. We will find our own way to get through different financial shocks and different challenges that come our way.
Right. Can we assume that the economy will do better next year than this year? Is that a safe assumption to make for now?
Let's hope so, because export, I would say, will continue to be very strong.
Okay.
And the main challenge will be consumption. And with the interest rates coming down, with more tourists coming in, and with the government organizing more mega events, and also with the property market and the stock market stabilizing, let's hope that consumption will go up, and then we'll see a much better picture.
No update on the Hong Kong peg? Hong Kong dollar peg?
It will stay here.
Okay.
For a very, 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 very long time.
Right. Eddie, thank you so much for your time.
Thank you so much.
Have a great conference ahead. Thank you for having us here. Eddie, you there, of course, Chief Executive at the HKMA. Bell, back to you.
Well, Dave, really big event, of course, and as you said, we've got lots of high-profile speakers over the day ahead. We're going to be hearing from Hamilton Lane, for instance, as we, of course, prepare or discuss what's ahead with Trump returning to the White House. So just some of the speakers that David is going to be speaking to later today on your screen right now. Of course, it's not just what's happening down at the Monetary Authority. We're also actually going back to Kowloon now, where the Magistrates Court and our China correspondent Min Min Lo is there as dozens of activists await their sentencing, Min Min.
Yes, you are awaiting the mass sentencing of these 45 pro-democracy activists as they are charged with conspiracy to commit subversion for participating in this unofficial primary election back in 2020. The legal proceedings just began about 5 minutes ago, and some of the defendants were seen waving to the audience before sitting down, and the overflow room is said to be completely full. It's a very dreary, windy, rainy morning here as we await the sentencing, and they represent some of the last batches of prominent opposition leaders that Hong Kong will see before the government had changed the electoral system to ensure that only patriots can run for public office. We have more ahead. This is Bloomberg.
You're watching the China Show. We're heading through the morning session, and actually there's some green across the screen in Asia. US futures are fairly steady, but as we've been discussing, the action overnight really was in the bond space because we have seen that march in 10-year yields to the 4.5% mark. That gave up somewhat. It led to less dollar demand, and they are positive factors for Asian equities, which is why you're seeing these gains across the board. It is still that story around what the Trump presidency means, who's going to be in his cabinet, what do his policies intend to achieve, will they be reflationary as well, and how does that impact the Fed? But they're all themes we've been discussing for several weeks now, not going away anytime soon. Chinese equities, meanwhile, of course, because we are keeping an eye on what's happening, whether we get any sort of stimulus measures or clues this morning. Dave, of course, is down at the Global Financial Leaders Summit, hearing from a lot of banking executives right now who, of course, are poised to benefit perhaps in the new Trump presidency, but you are seeing the Hang Seng here pushing 0.4% to the upside. Let's get more on markets now, bring in our Bloomberg MLive strategist, Mark Cranfield, joining us this morning. And Mark, I want to start off with your column that you've just published earlier saying Chinese equity investors are learning that it's better at home. What do you mean by that exactly?
Well, there's been some very clear evidence that the outflows from US-based equity funds that focus on China have been pretty large, particularly since the US election. It started to some extent when China began to do the stimulus measures in September, but it's really accelerated since the presidential election and obviously the confirmation that Donald Trump had won there. So it's not too surprising in that respect, but the numbers are pretty substantial. So we used to be in an environment where people globally who wanted to invest in China to take exposure to Chinese equities had a fairly easy route. They could go to the United States, very liquid, big ETF contracts, and if they preferred to be US dollar based, they could easily invest there and have a very clear exposure and follow the Chinese markets pretty closely. What we're seeing happen increasingly now is that the best place for returns is if you actually send your money to China and invest onshore in the equity markets there. Now, of course, that means for international people, they have to manage the currency because the yuan obviously fluctuates. But the PBOC is doing a very good job of maintaining it in a pretty tight range. So the currency volatility has become relatively low, even though people are expecting the currency will depreciate to some extent as the potential for tariffs comes in next year. But at least it's a manageable scenario. An option volatility is not particularly expensive, so people can insure that way. So what we're seeing is a theme where if you're an investor who really wants to do best out of exposure to China, it looks as though your route is to go directly into the onshore markets because they're outperforming what you can see in the global markets. And it could well stay that way until we get a very clear picture on the details, what tariffs, if any, are going to be imposed on China and how they're going to impact which sectors. Once we get confirmation of that, then we may start to see a rebalancing. But for the time being, and probably for the next several months, it looks as though investors will do better by actually being in yuan-denominated investments rather than US dollar or even euro-denominated funds.
Mark, and I guess just to maybe underscore your point there on, there are certain risk factors that are on the horizon that might effectively force monetary policymakers to sit on their hands at the moment. And the reason I say that was in a month's time, we had the Fed and we had the BOJ on the same day. We were speaking with Bill Winters here from Stanchart, the CEO. He thinks actually the Fed will move still in December. We're hearing right now from the MUFG chair, who's right in the room right behind me, talking about how the BOJ will raise their interest rates anyway to 1%, timing agnostic. Can we make the assumption that the path of rates remains clear while timing TBC? Are they done for the year, Mark? That's what I'm trying to get to.
I think taking the Federal Reserve, first of all, I think it really is an open question. You're going to hear a lot more Fed speakers in the next few days. Okay. They've still got more than a week where they can influence the markets in their thinking, and you can expect them to do so. It really seems to be a coin toss whether or not they go 25 in December or they stay on hold. If they go 25 in December, it will raise the odds significantly that they take a pause in the first quarter of next year. So that, I think, is the scenario that traders are trying to estimate here is, do we get the pause first or do we get the pause later? But it really looks as though the Fed is putting itself in a position where it doesn't want to match the pricing in the markets. The number of interest rate cuts going through next year, it looks as though the Fed is going to push back. Whether they do it all in one go or whether they spread it out is open for debate. But they will refresh the dot plots as well in December. So it's a great opportunity for the Fed to give a clearer message on what they see for next year. As far as the Bank of Japan is concerned, they keep on telling us that they intend to raise interest rates, that the wage negotiations are going in the right direction. Even the early forecasts for next year still suggest there's going to be big pay rises in Japan. And yet, when you listen to what Mr. Ueda, the governor, had to say yesterday, it doesn't sound like a central bank that is going to move in December. So it really is a question for next year. And from the point of view of the markets, the yen obviously is a currency suffering because of that.
Oh, yeah, okay. Well, Mark, since you brought it up, too, I mean, the dollar strength, can we bring that in here? So, okay, fine, we can maybe set aside what central banks will do. Is the cleanest play the equity market still, say, for example, the S&P 500? I mean, what is the setup for equity markets going into December? And maybe just to crowbar this in, NVIDIA earnings are coming out this week, and might that be the catalyst to take us all through into Christmas through the end of this year?
I think NVIDIA is a very big factor, as always. Their earnings they can move the market. They're a big enough company. Whether the results are good or particularly the outlook is very significant. How optimistic they are about the period ahead says a lot about the demand for AI and for other related avenues of business. So, yes, NVIDIA is huge. I would suggest right now the biggest factor in terms of US equity markets is Tesla. That is the one that has really outperformed. It's a highly volatile stock. A huge amount of money has been sucked in. So if you want to follow one stock to give you a clue of where the markets are going for the next couple of weeks, Tesla is probably the most dominant, most important one to watch for the time being. For now, it looks as though people are still buying into the same narrative and they support US equities. it will take a lot to derail that, particularly before January, particularly before we know what is going to be approved and what is not going to be improved in terms of the new US administration. But certainly, investors have a lot already in the market, whether it's in treasuries, in the dollar, in equities. So there are going to be position churning between now and January. But overall, you can expect people to largely stay with the same themes that they have.
Yeah, and actually, Mark, to your point, we did actually see Tesla leading the gains overnight with this possibility that the Trump team will ease the rules around self-driving. But that was our Bloomberg M-Life strategist, Mark Cranfield, there, and we'll have plenty more ahead. This is Bloomberg. Welcome back to the China Show and some of the top corporate stories we're tracking this morning. Bloomberg has learned that the US Justice Department will ask a judge to force Google to sell off its Chrome browser in what would be an historic crackdown on one of the world's biggest tech companies. Sources tell us that antitrust officials will also ask the judge to require data licensing and AI measures from the firm. Google says the proposals would harm consumers and developers. Xiaomi's quarterly revenue surpassed expectations as the smartphone company gained a foothold in the cutthroat EV sector it entered in March. Xiaomi says sales rose 31% to nearly $13 billion in the September quarter, with over $1 billion coming from its EV business. It's also kept its spot as the world's third largest smartphone maker, with handset shipments up 3.3% in the quarter. We'll have plenty more ahead on the China Show. This is Bloomberg. Some breaking news just crossing the terminal this morning. We do have the Hong Kong courts today sentencing dozens of former democracy activists. It's the city's largest ever national security trial, and one that's just been handed down is to the democracy advocate Benny Tai. He's been given 10 years in prison. That is the longest sentence we have seen meted out using the China-imposed security law. But I want to get to our China correspondent, Min Min Lo, who is outside the court this morning for us. So, Min Min, talk us through this sentencing and what else we're expecting today.
Yeah, so we're hearing that the court has actually been adjourned and they had announced all the sentences for the 45 defendants who were convicted, who were found guilty of committing conspiracy to commit subversion. And the most prominent among them is Benny Tai, the former law professor, who is accused of being the mastermind, the principal organizer of that unofficial primary election back in 2020 that is deemed by the courts as being trying to undermine the government. And he has received a sentence of 10 years as the principal offender, and this is at the lower end of the sentencing guideline, but still the longest sentence that has been handed out under the national security law so far. And aside from that, we're also hearing that Joshua Wong, who is the former student leader, the face of the umbrella movement in 2014, if you remember, he was sentenced to, I believe, 4.6 years in prison for taking part in that unofficial primary election. We're still waiting to hear details of the other sentences given out to the remaining defendants, and we'll give you more details as we get them. We understand that there's an 82-page document detailing the reasons for these sentences, and we're trying to get a hand on that copy as well.
Min Min, it's hard not to draw a parallel to what's happening there and also what's happening with the Hong Kong Global Leaders Financial Summit that's underway. And we've even heard from the likes of the Chinese Vice Premier, for instance, saying that Hong Kong needs to play a pivotal role, not just for China, but as a global financial hub. So when you have these sorts of sentencing and this crackdown on pro-democracy voices in the city, how is that likely to impact Hong Kong's reputation?
Yeah, certainly this court case is drawing a lot of scrutiny from the international community. As you said, the rule of law, the openness of Hong Kong had really underpinned Hong Kong's status as a key financial hub, and that's why we have the diplomats from various countries also attending the proceeding today. And you have countries like the US, for example, saying that this trial is being politically motivated and had been calling for the defendants to be released because they were denied bail and had already been in jail for about 3 years up to this point. And another thing that also departed from common law tradition is that these defendants were not granted a jury trial. They were trialed by 3 judges that were handpicked by the chief executive, John Lee. That also drew criticism as well. And we know that Hong Kong is now really trying to attract more investors into the city at a time when last year it actually lost that 51-year winning streak of being the freest economy in the world. It lost that status to Singapore before regaining it back this year. And now they're trying to draw more investors from other sources, including the Middle East as well, aside from the Western countries.
That was our China correspondent Min Min Lo live at the West Kowloon Magistrates Court. And to recap that, a Hong Kong court has sentenced former democracy advocate Benny Tai to 10 years in prison under a China-imposed security law. It's the longest ever sentence we've seen handed out, and certainly a move that could attract criticism and condemnation from Western governments. But I want to get back to our coverage now of the Hong Kong Monetary Authority Investment Summit that's underway in Hong Kong. And David, certainly something perhaps not casting a shadow, but it is certainly running in parallel to the event there.
Yeah, and I mean, quite literally where Min Min is not very far from where we are here, and the juxtaposition really of all these events taking place, right? But it certainly news talks, right? And, you know, we certainly hear what is going on there. We've been trying to understand as well how all of this might be affecting, of course, sentiment. It's a broader conversation, of course, that is really part and parcel. And I think we did hear, I was actually at the speech and I was listening in to, you know, the keynote this morning. The Chinese Vice Premier He Lifeng talking about how Hong Kong is and will remain the global gateway to mainland China. Joining us here exclusively on sets to discuss the private markets specifically is Juan Delgado-Moreira, co-CEO at Hamilton Lane, which manages almost $1 trillion. We'll see if they get to $1 trillion. Of course, he's about to tell us in a moment. Juan, it's very nice to see you, and welcome to the show.
Thank you for having me.
You were just inside.
Yeah.
Anything stand out so far?
I think you touched on the most important thing, which is the center role of Hong Kong in capital markets and the east and west meeting point, and for private markets and all other asset management.
Fundraising, how would you describe it this year compared to 2023? 2023 was challenging.
Probably the nadir of slow activity. It has improved. I think it's already haves and have-nots. Some funds were beginning to see movement and faster closings, and some others will keep this adjustment of expectations. But generally, sentiment has improved.
What's the holdup, though? And the reason I ask you that is we keep hearing this structural shift of money into your part of markets. Right. But then I also hear, of course, fundraising is not as fluid as one would expect. Just help square that circle.
Sure. I think you have to step back for a minute and broaden the aperture. Essentially, private markets has graduated from, a lot of people talk about private equity, or even when we talk about innovation, venture. And what has happened over the last 5 years, but even increasingly the last 2 years, is that private markets is across many asset classes. So whereas the fundraising in venture or growth might be slow relative to 2021, credit, for example, has continued to be strong. Infrastructure is growing very fast. And AI, we'll talk about for sure, is on a tear. So net, it's an improvement trend. And the weakness area is probably around the growth area, which was one of the largest, fastest growing things in 2021.
Right. Well, let's touch on AI then. Among the many strategies and that you oversee, where is AI most prevalent? Where do you feel it the most? And what do you think about valuations there?
Right. Well, good. It's like 2 or 3 questions in one. I like it. I think AI traditionally, within private markets, there's nothing traditional about AI, but within private markets, essentially, we've seen a lot of exposure to the venture capital part of portfolios. Okay. We are very active in venture capital at Hamilton Lane. We've been across the world on a global basis. There's been the 3 major areas of that, and that investing continues to happen. What has been more recently is the development of course, the data centers, the hyperscaling, and all the quasi-infrastructure investing and real assets investing that has to support, and the energy play that has to support AI, and we are also obviously being active in that area as well.
valuations in the public markets on AI have been elevated. I think is a humble way of describing that. How have things looked on your end? Have you guys adjusted?
Well, private markets, as you know, price off of or have a reference to the public market valuation. So of course you've seen that tremendous growth there. Nonetheless, it's important to point out that private markets typically trade at a discount to publics, and so at the moment we are looking at valuations in excess of 20 or 30% discount to public. So there is effectively good runway of growth and good valuation there. Within the AI, effectively you have to just again broaden the landscape, and you're going to look at a number of the different components of that value chain with private equity and venture can play really at the mid-market level, not just on the very largest data center type scale project.
Now, just to understand, I guess, some strategies have been around for a very long time. Private credit has been around for a long time. It's gathered momentum in recent years. Has the holding period gone up across the board?
Depends, David. The question there is, again, you can assess that, and we have a lot of data at Hamilton Lane, so I know that I get the question because of that. You have the longest data series on the private equity and on the buyout side specifically on that. And the holding periods, which is what feeds the M&A and the IPO market, the holding periods of that have been around 5 years or so for a long time.
That hasn't moved?
That hasn't moved. Will that creep up? Potentially over the next 2-3 years, could, as the liquidity improves, but it takes a little time to get there. But certainly this has been an industry which is well documented, owns assets, aligns with management, and achieves value creation that delivers to exit. The same would say on the venture capital, where some of the holding periods have been increasing through prior cycles. I think most of the direct lending that has taken place is very early on the maturity curve, and so it's too early to tell whether that will lead to holding periods longer. But if I may say, one of the biggest areas of liquidity in portfolios in private markets has actually been very active levels of dividend recap and refinancing. So the credit market has been quite active and quite liquid.
So it's too early to say how those deals eventually mature and end up.
Right.
I guess what you're alluding to right now.
Right.
What is is there an average deal structure, for example? How long do those deals typically, the ones that got originated very, very recently, what's the sense you get there?
Essentially, there's been the typical deal structure on the buyout side would call for a 5-year hold, a debt to equity of 50% or so, which is lower than it was on the GFC. And effectively, value creation, the 15 to 20% growth, top line, bottom line per year. If you do the math on that, you should be making 2 times money and getting over 20% rate of return, ideally. And the biggest metrics of the industry, contrary to what you might read out there, the biggest metrics of the industry have held quite steady through COVID, through the GFC before. And so for all that we can say about the 2021 vintage 22, it's 3 years into that holding period. And effectively it's quite early. And again, some of the metrics that we've shared with our investors is that you've been looking at quite healthy EBITDA growth, quite healthy top line growth, and not that dramatic an impact from the higher cost of debt that you've seen through the high rates environment.
Do you think the higher rate environment in the last, 2 years, and hopefully it goes down, we'll see. Has that forced more investors your way because of just the higher returns that you would typically get?
I think what's happened, if you take a bit of a step back in why are we here, why is private market so popular these days, it's essentially a bigger rotation into our space from private wealth. So I don't know about your mother, but my mother cannot access the private markets. That's been the case for a while, but that's changing. So out in the world, in the savings pools of the world that are handled by individuals, not by institutions, there is an increasing realization of why can we not get the returns the institutions have been enjoying for a long time. And that really, if you do the math on that, you could probably about double the size of the entire industry with that arrival of capital that has started already over the last few years. That's the single biggest secular move into private markets, which I think is fueling some of the topics that we can discuss.
Well, I mean, private wealth.
Right.
Help us understand the bridge between institutions and maybe as you go down the ladder in terms of being able to access what you guys offer.
Essentially, private markets is featured in institutional portfolios for over 50 years. We have data going back to 1976 as a vintage, so it's not a new thing. Percentage allocations to private markets have been steady or even growing from 20% plus. And if you now switch out of that to the individuals, is dramatically different picture. You're now here in many cases 0%, 1%, 2%. So why would that be the case, right? And the reason why private markets have been such a big part of the institutions and of all kinds of institutions is returns, low volatility, lower correlations. And that's really no different than what your mother and my mother would like to have for their retirement.
Yeah, well, they're just going to take it, I guess, and hopefully the next generation does. Juan, that's all we have time for right now. We could be here, and let's do this again.
Yeah.
Nice to see you.
Happy to see you. Thank
you.
you.
Juan Delgado-Moreira, their co-CEO at Hamilton Lane. Right, coming up here in the next hour, we're not done, so in about, I would say 20 minutes from now, give or take, we'll be joined here on set, Douglas Flint, Aberdeen Chairman, Sir Douglas Flint, about the global investor appetite for the Asian assets, especially in China. That interview is coming up at those times on your screens. Stay tuned for that. Plenty more ahead here. You're watching The China Show. Good morning.
You're watching The China Show, and there's two very different events that are happening in the city of Hong Kong today. We've got David, of course, at the HKMA Global Leaders Financial Summit, and our China correspondent, Min Lo, who's at the West Kowloon Magistrates Court for us. And Min, we'll start with you because we've just in the last few minutes seen the longest ever sentence handed out under the NSL. This is for the activist Benny Tai, who's been given 10 years in prison. But just paint the picture for us, set the scene, and what is the tone? Because I can hear behind you, for instance, quite a heavy police presence, it seems.
Yeah. Yes, it's a little bit noisy here because there's a lot of people gathered outside. There's heavy police presence here and a little bit of an emotional scene among some of the supporters here after the sentences were given out. The court had adjourned for now, and we already got the sentences of all 45 defendants, and the highest among them is handed out to Benny Tai, who is deemed as the principal organizer behind that unofficial primary election that took place in 2020 that was seen as an attempt to undermine the city government because the defendants had intended to gain a majority in order to force the city leader to step down at that time. He's gotten 10 years in prison. It's at the lower end of the sentencing guideline because the maximum penalty was life in prison. And another prominent figure, Joshua Wong, you might recognize him. He is the face of the Umbrella Movement in 2014, a former student leader. He is sentenced to 4.6 years in prison for being an active participant in the unofficial primary election. We got a range of other different sentences as well. I believe Claudia Moe, one of the ex-lawmakers as well, and a former AFP journalist got 50 months in prison. Others got longer prison sentences. This is quite a lengthy document that we got, 82 pages, explaining the reasons for the sentencing.
And David, I'll bring you in here because, of course, it's sort of a different sense, I guess, over where you are this morning. We've heard time and time again that this crackdown on pro-democracy voices in Hong Kong has drawn international condemnation. Do you think it has any sort of bearing on the finance community?
Well, I mean, stability is key, right? So, you know, to whatever, you know, if you're a businessman, predictability is first and foremost. And I think the juxtaposition, you can't make these things up, right? We're here, of course, and the conversation is this is the third year running of the HKMA Financial Leaders Summit. And the reason I simply bring up the third year is the first year was coming out of COVID. The second year is Hong Kong back as a financial center. And this is the third version is, you know, with mainland China now hopefully coming out of its economic doldrums, you know, what role will Hong Kong play to be able to facilitate the foreign capital that hopefully that they're saying is completely welcome to come into mainland China? We've talked about how and I think the conversation earlier on with Eddie out of the HKMA talked about how they're looking at deepening the bond connect as an example. And I think it's the juxtaposition of that. And just, I guess, in many ways, you know, when people look back at the last 10 years of Hong Kong, right? The last 5 years, even if you ask me, seem like a complete blur to many businessmen, right? So we were coming off a period of protests in 2019. We all know that. We all covered that. We were living through that. And then COVID hit, which lasted for about 3 years in the Hong Kong context, right? So we are literally coming out of this period over the last 4 or 5 years when, frankly, and then, we're trying to figure out, too, what the structural changes have been to this economy. We are closer, a bigger part of the greater Bay Area, for example. So is retail, luxury spending, eating out, that sort of thing changing? Is the nature of expats and the talent schemes that we've put in place here in Hong Kong, has that changed the landscape as well? So we're just trying to figure out all these questions. And the reason I say that is where Min Min is and where I am as well, it's the same coin. It's a different side to that very same coin. And I would say certainly from a financial stability perspective, security and stability are first and foremost before we can talk about the other things.
And Min Min, I guess to David's point around the changing face of the city, I mean, perhaps one of the most notable faces has been Jimmy Lai, and he's also going to be in the courts this week. So what are we expecting there, and also what has been the international reaction so far?
Yeah, Jimmy Lai is expected to take to the witness stand tomorrow for a different court case where he's charged with 2 counts of of conspiring with foreign forces and another count of publishing seditious material, and that is related to his role as the founder of Apple Daily, which is a pro-opposition, anti-Beijing newspaper that was forced to shut down in 2021. His lawyers had argued that he has no case to answer to, but that argument was pretty much rejected, and he has elected to take to the witness stand tomorrow. We'll monitor that very closely. But for now, countries like the U.S., for example, have said that this trial is politically motivated and have called for Jimmy Lai and these defendants to be released.
That was our China correspondent Min Min Lo for us, who is outside the courts in West Kowloon this morning. Of course, David Ingles down at the HKMA Financial Leaders Investment Summit, but we'll have more ahead. This is Bloomberg. Well, we're getting reports that multiple students have been injured in China's Hunan province after being hit by a white car on Tuesday morning. That's near a school gate. It comes as over the last week we've seen 2 fatal incidents in China. The first in Zhuhai, when a man drove his car into a crowd, killing 35 people. And on Saturday, when a 21-year-old stabbed 8 people to death in Jiangsu province. Bloomberg opinion columnist Karishma Vaswani thinks the violence is testing Beijing's control of the public narrative, and she joins us now from Singapore. So, Karishma, at this point, we're talking about multiple attacks just over the last several days. What's the parallel, or what should we be drawing from this?
Yeah, Annabelle, just to say the report or, the most recent incident that you were speaking about just moments ago, to give you details that's come in from Xinhua, the state news agency, and very sketchy details at this point in time, given the fact that the situation is as fluid as it is. But just to tell our audiences that what is being reported by Xinhua is that multiple primary school students in Changde, Hunan province, have been hit by a white SUV this morning near the school gate. Some of the injured were immediately sent to the hospital for treatment, and the number of injuries isn't clear at this point in time. Now, what I find interesting and what I've argued in my column, Annabelle, is that we are getting details of these horrific tragedies to the extent of the detail that we're getting that we've not seen necessarily before in Chinese society. Now, whether this is because there has been an imperative or an incentive on the part of authorities to report these details more frequently, or whether indeed we are having more of these attacks happening, that I think is the key question. But what I've observed and what I've been talking about in my column is that this is an unusual situation to be happening in China.
And unusual, yes, but given that sort of environment, how does the government respond?
Well, at this point in time, what they're doing is they have been using these incidents to find a way to tighten security even further. In fact, in the wake of last week's horrific tragedy, which killed 35 people, Xi Jinping actually said this was an opportunity to tighten security networks. Now, we all know, of course, that China is one of the most oppressive places on the planet and has more CCTV cameras, for instance, in Chinese cities than anywhere else on earth. Each time the Communist Party uses an incident like this to, in fact, put in more surveillance over its citizens, but is it keeping people safer? Now, I have to say that when you talk to Chinese people or look at the data about public security and public safety perceptions, China does pretty well, but this data is also often used to justify the degree of control that the Communist Party needs to continue to exert its authority over its citizens.
That was our Bloomberg opinion columnist, Karishma Vaswani there. Thanks so much for your insights as we also go back to the Hong Kong Financial Leaders Investment Summit. We are hearing from a suite of very well-known business leaders. Right now, the Blackstone, State Street, Morgan Stanley CEO and Apollo Global Management, just some of those on the stage in front of you.